I believe that you're discovering this video at one of the best point in time to invest in the stock market. This is because of the events of recent years, from the global pandemic down to the groundbreaking inflation. Remember, with chaos comes opportunity, and it is for the wise to make good use of this opportunity. Before we ride on, I want us to have a look at our table of content. What is a stock? A stock basically is a fraction of a company. It can either be listed in the stock market or issue out as private invitation. We shall be using an example to elaborate for better understanding. Let's say I started a business with $10,000 and this business required a capital of $100,000, which means I need an additional $90,000 to make a sum total of $100,000. I don't want to borrow money from banks or from money lenders because of the pressure that comes with such. The only thing I need to do is issue out shares to raise capital. So, the reason why shares or stocks are being issued in the first place is to raise capital from the general public. Now, there are two ways to do this. Because I need an additional $90,000, I can either go by public or by private invitation. When I talk about go by public, I mean I need to be listed in the stock market for the general public to come in as shareholders. Or I go in for private listing or invitation. At this level, I am a private limited company. I only send out invitation to individuals telling them I am selling a share of my company at this value. So what I do is I actually share the total $90,000 into different fractions with face or monetary values, and I sell it out to individuals. Now, to make things easier, I'm gonna take $90,000 and I share into 9 people, which means each person can buy a share for $10,000. This will raise me the total amount that I need. In return, each of these share receive what is known as a dividend. It can either paid quarterly, yearly, or anytime or any term you want to put it. The next thing I want you to understand is there are different type of shares, and these different type of shares function differently. First, we have ordinary shares. These are shares without any defined amount of dividend, but they have defined interest rate. Ordinary shareholders are the least to receive their dividend in a business, but they take part in decision making. They have voting rights. Many a times, ordinary shareholders, they take part in the day-to-day activities of the business, and their voting rights, as at point in time they are also being compensated by additional share listing to them. The next we have in line is preferred shareholders. Preferred shareholders are shareholders that don't participate in the business activity, have no say in the business, but have fixed returns paid to them at either monthly, quarterly, or yearly. Whether the business is going right or wrong, you need to pay your preferred shareholders. Now, it will interest you to know that most of the big companies don't go in for preferred shareholders. What is most common nowadays is ordinary shares, because it helps you as the founder, the CEO, or the institution to better run well. You should have in mind that When it comes to stock listing or stock sharing, we have what is known as plowback profits, which means that it is not all the profit that you make that you share to investors. As such, this is common, or it is only common when it comes to ordinary shares, because with preference shares you must, with or without profit, pay your investors or your shareholders. But with ordinary shares, you can always say, we are looking up to building the business. As such, we need to bring in back 5% of our net profit for the year, or for the semester, or whatsoever you want to do. I believe this gives you an understanding of what shares are. So the next aspect I want us to look at is how companies are being listed in the stock market. Now, like I initially make you to understand, is we have two ways that as an institution you can raise capital by rightful issue of shares. You can either go private by private invitation, or you can go by public listing. Going by public listing, you must be a public limited liability company that now issue your shares at what is known as initial public offering to the general public at the stock market level. From the stock market, any individual can get through a broker to buy your shares. Now, this go a long way now to give money to the companies. As private companies, we go in through private invitation, and this take more longer than public listing. Ladies and gentlemen, becoming a stock trader or a stock investor requires a lot. We are just a step away. So, what is the stock market? This is where a lot of people have a misconception about the stock market and the financial market. Like I earlier explained, the stock market is just an arm of the financial market that deals in fractions of companies' shares. For you to get started in the stock market as a stock trader or investor, you need to understand the fundamental and technicals of market analysis when it comes to this. On today's series, our focus is just to give you an explanation of what a stock market is, as we set a foundation to take off from our next series. Basically, a stock market is a public market, just like a mall, where you can get into and you get different products or services sold there by different producers. That is to say that in the stock market, you can get different companies being sold. You can get different products. For example, a stock market is where you can get shares of different companies being listed, companies in different industries, companies producing different products, from infrastructure, real estate, pharmaceutical, electronics, technological, and just to name but a few. So with this arm of the financial market, you have the ability to get different products, which in quotes are different companies. You can become a stakeholder or a shareholder of different companies in the stock market. To round up, for better understanding, a stock market is a place where companies are being listed to raise capital from the general public to better invest or re-inject these finances in their business for business growth. Stay tuned as we shall be looking at detailing from our next series what it looks like to become a stock trader or a stock investor. I believe this series has taken you a step further into becoming a better investor. If this is true, unlike it is with others, please give your comment down and don't forget to follow, like, and share. Thank you for being a part of this amazing journey of becoming a stock trader and an investor.